Are the gold bulls still in control ahead of Jackson Hole, the metal, backing away from the key psychological level of 1,300? So what's next for gold? Frank Holmes, CEO of U.S. Global Investors, joins us now. Frank, welcome back. Good to see you again.
Good to see you, and yes, go gold.
Well, the gold bulls still trying to hang on here. Gold slipped away from the key mark of 1,300 francs. So what's next? What do you see in store for gold?
Well, I talking to my gold conspiracy thinkers out there because there's a small handful of them, and they believe that gold gets knocked down every year for Jackson Hole so that the government can look good. So who knows? But that's I have not tried to put money on that trade, but it's interesting.
I had not heard that one yet, so that's an interesting observation, Frank. But you know, what can we expect from Jackson Hole? A lot of volatility here for the metal.
Yeah, I think a lot of rhetoric for between now and September the 29th for the debt ceiling. It's in the Wall Street Journal. McConnell says it's going to go through, and I think there's be lots of questions to deal with that and the state of the economy. Will rates continue to rise? Can you imagine if we weren't raising rates, how far the dollar would have fallen, because it's fallen dramatically? And I think that Trump wants that. You know, he doesn't get credit for it, but the falling dollar is truly helping the industrial sector of America. It's helping exports, and this is all good for, this falling dollar is very good for all metals, in particular gold. And I don't think they can raise rates much more without stifling the housing market, making it go worse. And there's a huge glut of cars. So I think any rise in rates would just make the car industry, which is a big multiplying impact for jobs, slow down dramatically.
So Frank, for you, is that really the only hurdle standing in gold's way? Because, you know, I had so many readers write in to me frustrated that gold was unable to hold 1,300, saying, you know, how come, you know, back in the day we could get to 1,900? Why not now?
Well, it's interest rates. So you can tell them that the 5-year government yields were negative, and then they went positive, and are slowly coming back to be negative again. But they're not positive, like they're not sort of pure negative. We need to have, if you want to see gold at 1,900, and remind all of them, when gold hit 1,900, the 10-year government bond yield was -3%. The 5-year and the 2-year were all massively negative real interest rates. So where do we have them today? 2-year and just on the cusp of 5-year. This is all very bullish for gold.
All right, Frank. So besides Jackson Hole, what else are you eyeing? What's your touchdown pass going to be this week?
PMI, Purchasing Manufacturers Index, which is a forecasting indicator. It's one of the best precursors to stronger energy prices and commodity demand to manufacture high quality products. We've had a weaker dollar, so I'm expecting it to be stronger, and that's always good for the commodity sector.
All right, Frank Holmes of U.S. Global Investors, thanks so much for joining us today. And thanks for watching this edition of Kitco's Gold Report. We'll be back tomorrow.